All right, good afternoon, everybody, and welcome to today's webinar on JobKeeper 2.0. My name's Charles Clavana, founder of Ion Books, and I'll be taking you through all of this afternoon. I hope you're comfortable. We'll be going through this fairly quickly, but first of all, what are we going to be covering today? So first of all, we're going to have a look at the end of JobKeeper 1, what that entails, what we're up to, where we're at so far. We'll then have a look at business eligibility for JobKeeper 2. So what kind of criteria is the ATO looking at to see whether you're going to be part of JobKeeper 2 or not? Employees. Now we're going to have a look as well at the eligibility and this new thing called tiers that's going to start from essentially the beginning of October. There's also some fair work changes in relation to JobKeeper. And then finally, we'll answer any questions that you may have. Before we get started, just a little bit of housekeeping. If you're unable to hear, please check your PC speakers because today's webinar is going to be going through all of your computer speakers. Everyone is also muted as well. So if you do have any questions, please type them into the Q&A box. Don't type them into the chat box because I probably won't be going through those. And I will stop for questions if anything comes up as well. So please type them in the QA box and I'll take care of them for you. You can also change your audio options in Zoom by selecting the up arrow next to the microphone, and then you can choose different speakers to be able to listen to, or a pair of headphones if you've got them instead. So let's start off with a bit of a background as to where we're coming from, where we've been at so far over the last 6 months or so. So JobKeeper 1, for those of you that may have been on it or maybe haven't been on it, it's for employees that were employed as at the 1st of March. One of the big things is that you did need to suffer a 30% decline, but that was potentially on projected turnover. You could guess that you're going to be having a decline and you would still be in for JobKeeper. There was then a requirement for a monthly declaration each month to say, yes, I've paid all of those wages for this month. These are the employees. And then you would get reimbursed by the ATO at that stage. It was $1,500 for each employee, and there was a rule of one in, all in, so that if one employee was in, then you had to offer it to all employees. Employees could decline if they didn't fill in a nomination form, but otherwise it was a one in, all in kind of a scenario. And then finally, JobKeeper 1 ends on the 27th of September. That's the end of it. There was also JobKeeper 1.1, just to keep things interesting when you thought you had everything sussed and us bookkeepers could relax. No, from the 3rd of August, something changed. So from that point, you could retest employees, and anyone that was employed as at the 1st of July would be eligible for JobKeeper from the 3rd of August. So that would cover new employees that started from the 1st of March through to the 1st of July. And if casuals that hadn't been employed for 12 months as at the 1st of March, if they had been employed as at the 1st of July, all good, they could now join JobKeeper 1.1. Also, any employees that had have turned 18 between March and 1st of July would also have been eligible at that stage as well. One thing not too many people were kind of aware of, I was discovering, was that employees could swap employers for JobKeeper if their employment ceased with the employer that they were with for JobKeeper. But now let's have a look at JobKeeper 2 and where we're heading to. So due to the big things happening essentially over in Melbourne, is the big guys that suffered a lot, but also throughout the rest of the country, the ATO and the government have decided to extend JobKeeper from the initial period of 6 months from the 27th of September. And there's essentially 2 extensions. So we're calling this JobKeeper 2 and then JobKeeper 2.1 or 2.5. I don't want to think about JobKeeper 3. That would be anything that in my mind is past the end of March. We're going to be really bad if we have to go to JobKeeper 3. So hopefully we're never going to get to that stage. So essentially JobKeeper 2 is going to start from the 28th of September and it'll run through to the 3rd of January. There are now 2 tiers of employees, and we'll go through the different tiers and how to determine what tier employees are on later on in the webinar. But essentially, it's now $1,200 per fortnight for tier 1 and $750 for tier 2. So everybody's pay will be decreasing for the JobKeeper, especially if they're stood down. JobKeeper 2.5 or 2.2, whatever we're going to call it, is going to start from the 4th of January through the 28th of March. And again, your staff are going to see another drop on their reimbursements or their top-ups to $1,000 per fortnight for tier 1 and $650 for tier 2 employees. So, JobKeeper 2, some of the rules have now changed on the business eligibility. By far, the largest change is that it's now an actual 30% decline on the 30th of September quarter to the quarter ending last year for September as well. So there's no more projections. You must have an actual decline now of 30%. And the ATO, all of your September BASs from last year should have already been lodged. So the ATO knows those figures, and they're going to be looking to pre-fill, and they're going to be looking to test pretty early on to make sure that businesses qualify properly. They're going to actually be able to check this stuff now, and they're going to check it pretty quick. Also, a large change is that now it must be assessed on the same basis as your BAS. So if you report your BAS on a cash basis, you have to measure your decline on a cash basis. If it was accruals, then the same goes on the accruals. That again is different from JobKeeper 1, where you could actually change from cash to accruals in terms of determining your eligibility. Again, why is this? Well, the legislation talks about a GST turnover. And if you think about it, it also makes it a lot easier for the ATO to compare and check whether you are in fact eligible for JobKeeper or not. So either way, it's the same basis as your BAS. One of the interesting changes that we noticed going through the legislation is that sale of assets are now included in your GST turnover. We've checked this with all of our industry bodies, and what they tell us is there's some huge arguments at the ATO as well as the Senate in terms of this sale of assets. Unfortunately, it is still in. So if you sold a ton of assets in the September quarter, this September quarter, it's going to count towards your GST turnover. Finally, to continue into 2021, that second tranche of JobKeeper 2, you need to retest for your quarter December to December last year. Again, a little bit different than JobKeeper 1, where once you were in for the 6 months, you're in for the 6 months. This is by quarter now. So if you're down for the September quarter, cool, you're in for October to December period. If you want to be in there for January to March, then you're going to have a December quarter decrease there as well. Perfect. I've had a couple of questions already about alternative tests. So Jeremy, this is going to answer this question for you, as well as the anonymous attendee that's typed this in. So the alternative tests that were valid in JobKeeper 1 are still going to be valid in JobKeeper 2. The biggest difference is that 1, you're going to have to assess it on a quarterly basis, whereas the alternative test previously could do it on monthly, and also the same basis as your BAS again. So the alternative tests that mainly apply to our clients are new businesses. So businesses that started in, let's say, January, before the 1st of March. In that case, for a new business, you have a look at the months you were open for, calculate an average monthly turnover up to the 1st of March, okay, 1st of March, which is when the world ended. 1st of March, turn that into a quarterly amount, and then compare that to your September quarter. All right, so that's the new businesses. Growing businesses. So let's say you started, you could have started 2 years ago, but you're going through a huge growth phase through your business. So potentially, you can't compare the periods because you're growing so quickly, and that growth is now stopped because of COVID. To be eligible as a growing business, you must have had a 50% increase over the last 12-month period, 25% in the 6-month period, or 12.5% in a 3-month period. Same deal like the new business. If you were a growing business, you take an average over those 12 months, 6 months, or the 3 months, turn that into a quarterly amount and compare that to your September quarter. Finally, clients that have lumpy income or irregular turnover. So this is not seasonal income. So the ATO is pretty clear on this. This isn't seasonal, say, apple farming or something rather like that. This is for irregular, lumpy income. Think commissions, real estate industries, those kind of things like that. To qualify for the lumpy, I love the term lumpy. To qualify for the lumpy income test, alternative test, over the last 12 months, one quarter needs to be, your lowest quarter over the last 12 months needs to be at most 50% of your highest quarter. All right, then you will qualify for that. Same deal then, similar concept across all of these. Take 12 months, take an average, multiply that by 3 to get a quarterly amount, and then apply that against your September quarter. Again, cash basis if you report on a cash basis, accruals if it was accruals. Okay, so I hope that answered the question, Jeremy. Great question. All right, so let's have a look at the timing, because there are some huge timing impacts on this JobKeeper 2. So as we know, JobKeeper 1 is ending as at the 27th of September. From the 1st of October, we need to start validating your GST turnover. Are you going to qualify for JobKeeper 2 or not? Some of you, we're not going to know what your September income was until October. Potentially even middle of October, if not the end of October. So really important there. We're going to have to advise our employees as we start doing that assessment. Now, I'll show you in a second that the calendars going forward past 27th of September, but there is a fortnight ending 14 and that fortnight number 15, sorry, not ending 14. 14 finishes on the 11th of October. So fortnight 14 and 15. You can't top up employees if you don't know that you're going to be eligible yet. So I'll talk to you shortly about what to do about that. 14th of October, we need to lodge your September monthly declaration. Okay, just like previously, you still need to get your September declaration in and get reimbursed by the ATO for your September JobKeeper. Fortnight 15 is going to finish here on the 25th of October. And then by the 28th of October, we need to calculate that 30% decline. And there is also something called a 10% decline, which we're going to go through shortly as well. But that's in relation to Fair Work. So let's have a look at the JobKeeper fortnights for JobKeeper 2.0. So as I mentioned before, we've got JobKeeper 12 and 13. This is what we're already going through, right? So this is the last week now, JobKeeper 13, fortnight 13, and that's the last fortnight of JobKeeper 1. JobKeeper 2 starts from the fortnight number 14, which ends on the 11th of October, and JobKeeper fortnight 15, which ends on the 25th of October. Now the ATO, like I've said, we don't know whether you're going to be eligible for JobKeeper or not. So one of the biggest things is do not top up anybody until you know 100% that you're going to be eligible for JobKeeper 2. All right, so do not, from next week, from this Friday, do not top anybody up on JobKeeper. The ATO, once you know whether you're eligible or not, the ATO have given you a provision to allow you to back pay people as at the 31st of October. So you don't have to pay them actually in the fortnights for 14 and 15. Big news there. 16 and 17 is going to be like pretty much normal fortnights. And then a big one again is going to be the December. So fortnight 18, 19, and as you can see, 20. There's going to be 3 fortnights in December. And interestingly enough as well, that last fortnight's actually going to end in January. The last payment date will be the 3rd of January. And that will still count in your December JobKeeper declaration. All right, really interesting stuff because that's the first time it's actually in advance through all of this stuff. So 3rd of January. Again, it's going to make some interesting things around timing because you could potentially pay people on the 3rd of January, but remember your declaration needs to be in by the 15th of January everyone's still going to be on holidays. It's going to be, crazy period. Biggest thing on this, guys, is communicate with your staff, with your team. All right. So like I said, you may not be eligible or able to assess your eligibility for JobKeeper until later in October. So as I preempted a second ago, do not pay any top up after this week, after 27th of September. Your employees are just going to have to wait to be topped up, and the ATO have allowed you late payment. But let your staff know. So let them know that, hey guys, we don't know whether we're eligible for JobKeeper 2 yet or not. We're not going to top up any of your pays yet until we know. Once we know, we will back pay you and give you that cash. Now, remember, these guys are relying on that money, or potentially relying on that money. And you'll also need to notify them that the dollar figures are going to change as well. So we'll tell you in a second about that next thing, tier 1 and tier 2. So talking about staff, let's have a look at employee eligibility and how that works. So that was what we just finished covering, was the business eligibility. If you've got any further questions, please type them into the questions box and I will cover them. So employee eligibility. So for starters, there's no need to re-enroll them in the ATO portal. There's no need for those new declarations, so they don't have to fill in another nomination form. There's no new declaration we need to lodge to the ATO. It's all, you just continue on. And essentially the same rules apply to employees as before. So they've got to be 18 or over. If they're under 18, they need to be financially independent. They need to have been an employee either as at 1st of March or 1st of July. And if they're a casual, they need to have been for 12 months as at the 1st of July, having a regular, consistent employment with that employer. So that does not shift by 3 months. Just because you're now eligible from October, it does not change that the employee start date to the 1st of October or anything like that. It's still the 1st of July. As I said, October top-ups need to be done by the end of October. So this tier 1 and tier 2 thing that we've been talking about, this is the biggest change really, and it is going to make possibly a few headaches. So throughout JobKeeper 1, there was a lot of complaints, and you would have seen a lot in the media about employees suddenly getting $1,500 a fortnight when potentially previously they were only working 5 hours a week or really casuals. And so the ATO and the government have now addressed that issue by creating 2 tiers of employees. And they're measuring that on 80 hours or more in a 4-week period. So technically this could potentially still be part-time. That's 20 hours a week. So that's pretty much half time, right? So 80 hours in the 4 weeks prior to the 1st of March or the 4 weeks prior to the 1st of July. That will qualify them for tier 1. If they're less than 80 hours in a 4-week period, then they're tier 2. And they will get $750 a fortnight. And then from the 1st of January, essentially $650 a fortnight. Tier 1, $1,200, and then $1,000 as well. So as you can imagine, there's a lot of, not kind of gray area, but questions about the this period of trying to assess whether people have worked 80 hours in the 4 weeks or not. So how does it work? As I mentioned, it works on pay periods, okay? So here's the 1st of March or the 1st of July. You've got 4 pay periods, or 4 weeks, sorry, of pay periods prior to those 1st of March or the 1st of July. And you need to assess how many hours do the employees work. Whether they're over 80 hours, cool, tier 1. If they're less than 80 hours, fine, they're going to be tier 2. All right. Now, of course, there's some alternative tests on the hours as well, because, no one size fits all across all businesses in Australia. So first of all, you can use the prior 28 days if the original is not usual. So what I mean by that, let's go back to this screen, is let's just say this 4 weeks before the 1st of March is not their usual ordinary type of hours. I don't know, maybe they're on holidays or they're away or something rather like that. Cool, you can actually go 4 weeks prior to that. So now we're talking January. 4 weeks there to assess, is this a normal sort of working period for that employee? And now do they meet the 80 hours or not? Okay. What if there's no records of how many hours they worked? Well, then have a look at how much did they get paid. Was it more or less $1,500? Because that's kind of the guide that the ATO, the government's using for this 80 hours kind of a thing. What if they're on commission basis? So commission only reps in the sales industry. Are they full-time? Are they not full-time? How many hours did they work? Well, the easiest way to look is how much did they get paid in the 4 weeks prior, or that 4-week period. Again, then you can have a look at that $1,500 rule or not and assess whether they're going to be under tier 1 or tier 2. Finally, notice we're talking about 4-week periods. 4 weeks is not 1 month, right? So what if staff are paid on a monthly basis and they happen to not have been paid in the 4 weeks prior to that 1st of March for some reason? Cool. It's not really that hard. Pro rata it. All right. So find out the months and work out a pro rata. Luckily, there's 28 days in February. Works out exactly to be 4 weeks, right? So that's not too bad there. All right. I've got a couple of questions coming through. Guys, I'll answer those ones. No, I'll answer the ones that that relate to employees right now. So Ross has got a question. He's asked, is the employer able to choose to test as at 1st of March or 1st of July? Essentially, yes. So what we've been told is if you do the assessment for the 1st of March and they're less than the 80 hours, then Ross, you can go through to the 1st of July and assess have they met the 80 hours or not. Okay. So if they fail it, first of all, in the 1st of March, have a look at the 1st of July. And remember, if that 1st of March one isn't ordinary or usual workings, then you can go back 4 weeks prior to that as well. Great question. The other questions that are in relation to the first part, I will answer later on. If all employees are tier 2, eligibility is determined. Chris, I'll come back to your question. I need to read that a little bit clearer. So again, once you've determined what tier staff are on, guess what? You need to notify them again. Tell them, look, dude, I've assessed you. You're going to be under tier 2. You're now going to get $750 a week, a fortnight, or whatever it is. So tell them what is going on, notify them so there's no nasty surprises on there. Tell them how much they're now going to be topped up to. Okay, so Chris, coming back to your question now, because that's pretty much the end of the employee eligibility. So let me go through the questions I've got about the employee eligibility side. So Chris asked a question, if all employees are tier 2, it would normally earn more than $1,500 per fortnight. What do we do in October before eligibility is determined? So there's two kind of bits possibly in that question. So if you've assessed that they work less than 80 hours in that 4-week period, they're tier 2. The $1,500, the amount they get paid is only relevant if you can't assess their hours. If you can assess their hours, then you know they're on tier 2. The amount they get paid is irrelevant. The second part of your question, what do we do in October before eligibility is determined? As I mentioned, do not pay anything or top up anything until you know what the eligibility is. If they're not working at all, then don't pay them anything and you're going to back pay them. If they're working reduced hours or something or other, just pay them for the hours they've worked. Do not top them up until we know where they're at. Xenia had a question from the section before. Does the September top up need to be done by 27th September or can it be done before the end of the month? Essentially the end of the month, Xenia. I know your situation, so yeah, you can do that by the end of the month. for your monthly guys. Sandra had a question. Does a business still need to be established at 1st of March, or has that date changed also? No, that one hasn't changed. You still, unfortunately, to be an eligible business for any of the JobKeeper, need to be the 1st of March. It's kind of a given, but there is actually in the legislation some really fine print that says to be eligible for JobKeeper 2, you must have been eligible for JobKeeper 1. Whether you applied or not, doesn't matter, but you must have been eligible for it. And that's where that 1st of March comes in. You're not going to have been eligible for JobKeeper 1 if your business unfortunately started after the 1st of March. Okay, so Fair Work. So what's allowed under the JobKeeper for employers that are, well, eligible under JobKeeper? So for the first part of JobKeeper, Fair Work enacted a number of directions to allow the flexibility in handling your employees through what is hopefully a once in a lifetime situation. So if you were a JobKeeper employer, you were able to direct to your staff duties and location of work. You could change that. You could reach agreements with employees around days and times of work. You could stand down employees all the way down to 0 hours. You could completely stand them down completely. So you had that ability. And the notification period was 3 days notice. There were also some special annual leave provisions. So what you're allowed to do if you're a JobKeeper employer under JobKeeper 1 is you could request employees to take annual leave so long as 2 weeks remained. Okay, so you could direct them to take annual leave. Also, the employee and employee could agree to take annual leave at half pay. That was also something. Now, the huge change here, guys, is regardless whether you're on JobKeeper 1, 2, 2.5, or not on JobKeeper at all, there is no extension on the annual leave provisions on this page here. All of that stops. So after this week, you can no longer take annual leave at half pay. You can no longer direct employees to take annual leave. Okay, big change there. No extension. All right, JobKeeper 2, Fair Work changes. So let's cover the easy stuff first. If you're on JobKeeper 2.0, the Fair Work determines you to be something called a qualifying employer. All right, so that means, funnily enough, you qualify, right? Because you qualify for JobKeeper. Essentially, the existing provisions continue, not the ones about annual leave. Like I said, they completely stop. The ones previous to that. So they continue, can direct employers on where they work and so forth like that. You can stand them down to 0 hours, so no working whatsoever. And you only have to give them 3 days notice to be able to stand them down and so forth like that. What if you're no longer eligible for JobKeeper, but you were on JobKeeper 1? Fair Work's created this new class of employers called legacy employers. And there's a couple of stipulations here. So first of all, you must have received JobKeeper 1, but not be on JobKeeper 2. This is a huge one, guys. You must still have suffered a 10% decline in the September quarter. So if you're on JobKeeper 1, but now you're going gangbusters and you've had the best quarter you've ever had, you're not longer on JobKeeper 2, you're not a legacy employer either, and you've got no special Fair Work provisions. If you're on JobKeeper 1, you've declined more than 10%, but not more than 30%, right? Because you're no longer on JobKeeper 2, then you can be what's called a legacy employer, and you've got some special rules for Fair Work in that case. In those cases, what can you do? Well, you can stand down staff to 60% of their ordinary hours assessed as at 1st of March. So what were their ordinary hours as at 1st of March? Cool, you can stand them down to 60%. That's essentially 3 days out of 5 days for a full-time employee. That 60% reduction can't result in the employee working less than 2 hours per day. All right, so no matter what, you've got to give them 2 hours of work per day. And the notification period has changed as well. It needs to be 7 days. Sorry, I'm trying to look at the questions at the same time. I shouldn't be doing that. So 7 days notice period there as well for JobKeeper 2 if you're a legacy employer. Now, 10% decline, what happens there? Now, of course, there's paperwork around this 10% stuff. What does it actually mean? So first of all, employers had to receive at least one JobKeeper payment, right? At least one from JobKeeper 1. It's based again on your actual GST turnover for the quarter. It's once again, same basis as kind of JobKeeper 2, i.e. it's based on your BAS reporting. If you're a cash, then it's on cash. If it's accruals, then it's on accruals. You need to have suffered an actual decline of 10%. Now, more importantly, you need to have a little certificate that says, yes, you've declined by 10%. And there's 2 ways to get that certificate. First of all, the employer, you guys, the bosses, can make a statutory declaration that you have declined by 10%. ATO is really clear on this. There are penalties for making a false declaration. Okay, guys? So don't just, make a guess. You need to dotted your I's, crossed your T's before you make that statutory declaration that you've declined by more than that, by at least 10%. Alternatively, your tax or your BAS agent, i.e. your bookkeeper, can give you a certificate where we sign off on the fact that you've declined by 10%. And of course, we get in trouble if we falsify that certificate. So look, Ironbooks, for any clients that need it, Ironbooks will supply that certificate. We've got the templates set up and we'll supply those. Some people are getting a little bit caught up on this 10% decline. Look, it's only for fair work, okay? It's in some ways got nothing to do with JobKeeper. You only need this 10% decline certificate if you want to use those special fair work provisions that we just spoke about here. If you want to stand down employees and all the rest, you're going to need 1, 10% decline, and 2, a certificate or a stat deck that says you have indeed declined by 10%. Okay, really important. And like I said, Ironbooks can supply that for our clients, and that's what we're going to do. Couple more questions. Let's just go through these before we then have a look at JobKeeper 2 starts. What do you need to do? So actually, let me just change the screen to that one. Okay, next title card, so to speak. So we've got a question from Roz. If they fail 1st of March but eligible as 1st of July, can we still choose to go off 1st of March? I guess you're talking there about the 80 hours thing. Good question. I would think probably not. It comes down a little bit like that all-in situation. But that's a great question, Roz. I might actually have to do some research on that one and come back. So just to be clear, Roz, you're talking there if someone becomes a tier 2 looking at the 4 weeks prior to 1st of March, but would be tier 1 if it was at 1st of July. Which tier, how much should you be paying them? What tier should we put them on? That one I might actually have to get back to you on. I've got your email address, so I'll need to look at that one. Jeremy's got a question. The retest for new business, January and March figures is low due to COVID. How can they use this test for me? It's possible to use July to September to test. No, so Jeremy, what we're going to do there for you is because you started essentially in January, it's only from January to March, but have a look at that. I would say only March is really down for you. And then we compare that to the September quarter. So it's still compared to the September quarter and whether you're down or not. You need to have been down in the September quarter. Michael's got a question. What of businesses that started just this September 2020? As the income in the September 2020 quarter has no 2019 quarter comparable, how do we determine the eligibility? Have a client who split this September and they were previously eligible, but as they have now split, one still is eligible in the second spilled over business, what happens to the staff? If I carry the eligibility over, I'm not sure as the new entity has no income in 2019 year. There are some alternative tests, Michael, about restructuring. I didn't talk about those because, to be honest, off the top of my head, it doesn't apply to any of our clients. My gut is still that the new entity wasn't trading as at 1st of March, and essentially too bad, so sad. But have a look at the alternative tests for business restructures. That might still work for you there. And Roz, yes, the 80 hours. All right, cool. Like I said, Roz, I'll have a squiz at that and I'll let you know. All right, so what do we have to do when JobKeeper 2 starts? What needs to be done? Let's have a look. So there's really going to be 3 situations you're going to find yourself in. Situation number 1 is that you're no longer eligible. In this case, there's no need to unenroll with the ATO. There's no need to finish employees within your payroll system. You simply stop lodging your monthly declarations. It's pretty much that simple. No more monthly declarations to the ATO. You obviously stop topping up your employees. You don't have to do anything. You pretty much just stop lodging to the ATO. There is newly eligible. So clients or businesses that are eligible for JobKeeper 2, and for whatever reason, they didn't nominate themselves for JobKeeper 1. In that case, we need to enroll with the ATO online, enroll your employees with the STP start codes, and of course, set up your STP tier codes once you've assessed your employee tiers. And the third one, of course, is continuing employers, those that were on JobKeeper 1 and are now on JobKeeper 2. What do you need to do? Well, first of all, you don't need to re-enroll. There's nothing that you need to do on the ATO side of things. You don't need to restart your existing employees, say within the payroll software or anything like that. You do not need to obtain new nomination forms either. Any new employees that essentially coming back to work, because remember, they had to be an employee at least the 1st of July, so it's not a brand new employee, you would set an STP start code. If the employee is coming from another employer and they're on JobKeeper, then yeah, we would also start a start code. We then need to set up tier 1 or tier 2 STP codes to the employees. Now, Xero hasn't gone live yet with the new STP enrollments. We've seen a couple of previews literally just today. Xero supposedly is going live with it tomorrow. And so from tomorrow, we'll be able to start setting up STP codes within the payroll system. Essentially, don't do that until you've assessed whether you're going to be eligible JobKeeper yet or not. Unless you're unless, you know, at this stage now, it's today, the 22nd of September, 23rd of September, you're like 40% down, you're completely closed, you're over in Melbourne, you've got to know that you're going to be eligible. By all means, you could start setting it up. Anybody else, wait until the end of September, till your figures are finalized and we can figure it out. So what's next? So for Ironbooks clients where we're managing your JobKeeper, we will review your September quarter turnover if we're managing JobKeeper 1 for you. We will then notify you if you're eligible for JobKeeper 2 or not. Expect that first week or 2 of October. As you can imagine, we've got a whole ton of clients we need to go through that for. We need to possibly reconcile your accounts. We need to assess, make sure that your income is correct before we can even assess it. So it's not as simple as just running a report. We need to make sure and finalize your accounts for that period as well. We then need to review your employees' hours of work to determine their tier level, and we'll set up the payroll systems accordingly. Then finally, we'll provide to you templates for you to notify your employees. Dude, you're on tier 1. Dude, you're on tier 2. We can also we'll also provide you with notifications to give to your staff if you're no longer eligible for JobKeeper, or even the fact that you need to wait until the end of October before you top them up. So essentially, we'll give you guys all of that stuff so that you can notify your employees and so forth. And look, guys, that is pretty much JobKeeper 2.0. So if you've got any more questions, please type them into the questions box and hit send. Otherwise, you can hit me up on emails or your normal bookkeeper at Ironbooks. Ask any questions there. Follow us on Twitter, YouTube, and Facebook. This video is actually being live streamed on Facebook. So if you like us on Facebook, you'll see that video. You can type in some comments there. I will also be uploading a recording of this over to YouTube as well. If you subscribe to our channel, you'll be able to see that. You can go back and look through this. And also, funnily enough, comment on it, like, comment and subscribe, all of that good stuff on YouTube, which will be good as well.